We wanted to start with a bit of a market overview this month. I think this is a good time of year to just make sure we're all calibrated on the state of the market. So a couple of updates that I'm sure are not new or novel to anyone, but interest rates have been rising. The Fed continues to hike rates. It's got a target to get rates a little bit higher than they are right now, slightly over 5%. So we see a couple of additional rate pushes to come between here and the rest of 2023, followed by some additional adjustments in 2024, likely downward as they become satisfied that inflation has been tamped down. Tandem with that, we wanted to talk a little bit about the big R word, recession, right? So we hear a lot about that in the news these days. I want to talk a little bit about what that means for storage and our investments. And so what you're seeing on your screen here is from the Federal Reserve, from Fred. And it's just a little graphic that shows pricing power and storage over the last, forever, since 1965, let's just say that.
Yeah.
And kind of what happens in recessionary periods, immediately before and after recessionary periods. The gray bars on the graph are your recessionary periods. And the blue line is your pricing power in self-storage during, before, and after those periods. So here's why we're showing this to you, why we thought it was important to have a little bit of a market overview. The market has been red hot the last couple of years. We know that it's been hot in lots of industries. Storage has been no exception. We've seen a little bit of cooling, as you would expect from seasonality in rate strength in the winter months, Q4, Q1. We think that is going to change in the spring. Again, seasonality allows us to be a little bit stronger with our pricing. We know at Hearthfire that we strategically are going to be pushing harder on existing customer rates, leveraging pricing power with street rates to get customers in the door, fill the facilities, stabilize them, and then use the existing customer rate strategy to push revenue upward. That said, we're all existing in a little bit of uncertainty as always, and we're seeing the price moves that we've been seeing the last 6-12 months could be interpreted as the typical movement upward in pricing power that you see right before recessionary periods. And that's held true really on every one of the bands that you see on the bottom right corner of your screen. So with that, pricing recession resistance of storage, right? So this is really an important chart because even if pricing is starting to tick downward, whether it's just because of seasonality and macroeconomic pressures, this chart should give you great hope that pricing always rebounds right after the recessionary period ends. It is very resilient in storage. Even in the great correction of 2007, 2008, pricing ticked downward slightly, but rebounded right afterward, and we find ourselves at the record high pricing power that we have today. So let's jump into our portfolio as opposed to the entire economy, world, and universe. So
Growth Fund 1.
Growth Fund 1. We want to talk a little bit about Growth Fund 1. What we're going to talk about today, we got some feedback from last month's presentation. Folks wanted a little bit more of a story, more of an explanation of where the investment was, and
the business plan and how things are going overall, as well as numbers. So just everything, Mike.
Yes. So I'm going to try not to beat everybody to death with numbers. I think the discussion, the more important discussion, since this is self-storage and not a ton changes in a month, is where are the portfolios versus their underwriting, and what's the go forward plan? How do we intend to meet and exceed the underwriting? So what I can tell you is with all the portfolios, there is a unifying theme. I've actually been working with our management company, Atomic, on our strategy for success this year. The strategy is pretty simple, and it actually involves Atomic as well as our construction partner, Whitney. Prong number one of the plan is upgrading and expanding. And in Hearthfire Growth Fund 1 especially, we have a plan to upgrade and expand the Lidditz and Cloverleaf stores. I toured those in January. That plan is in progress. We have some work at Lidditz was 25% complete in January. Cloverleaf is moving forward very quickly. My partner here, James McAllister, has been working to upgrade some of the in-place rates for the commercial space. We're getting the office space at Cloverleaf occupied. And that ties in with the second prong of the strategy, which also touches on Atomic, which is improving in-place rents. How do you improve in-place rents? Well, what we don't want to do is just move our rates up. All that does is it dissuades some portion of the market from renting at our locations. So we're going to be a little bit smarter than that. And we're going to keep our entry rates down, make it very attractive for customers to rent with us. And as storage operators have done since the dawn of time, once you have them in a storage unit, they become much stickier. And at that point, we'll have a programmatic rate increase plan that's executed. First increase month 6, next increase every 9 months after that. We've done a good deal of work in the last month with Atomic on improving our ability to capture new business. So increasing the size of the top end of the customer demand funnel, getting more customers into the funnel with Hearthfire, capturing more rentals, keeping those customers in place, and then executing on existing customer rate increase strategy. So that's HG1.
The big news here is on our next slide, right? Of
Expansion.
huzzah, we have final site plans and moving forward with the expansion here at Greentree.
Yeah, very, very exciting expansion in Greentree. So just I'll utilize my cursor here a little bit to illustrate what we're showing you on the screen. To the left and at the top are existing buildings, what is currently at the Greentree facility. Everything down here in the right corner, this is all going to be new product that we're adding on. So it's pretty good expansion.
As well as this in the top right, yeah.
Yeah.
So the roofers here now have multiple bays that they're using really to just park their work trucks and things like that. So this is where a new facility will be going.
Yeah, so essentially this more than doubles the number of rentable units at Greentree. That's pretty exciting. Huge return off of that sort of expansion. It's in motion, plans have been finalized. That's the big hurdle to clear. Now the rest of it's just numbers. All right.
Okay.
Let's talk a little bit about Londonderry. Again, this is another one that has a two-pronged plan. Prong number 1 of the plan, improving in-place rates. Same strategy as with Growth Fund 1. That one doesn't really change from fund to fund. Second part of the plan, which is more exciting in my mind, and I think Corinn will agree, is expansion. What we've done here is I had my 3-year-old take their red crayon and illustrate some areas around the Cedar Ave property where we have some expansion potential at the property. So while touring the property last month, realized we have quite a bit of land. We have enough land to add a few hundred more units here. I don't know that demand is going to justify that. We're currently looking at what demand will justify here, but there is an expansion play. The land is already flat. It is mostly cleared. There's some scrub and a little bit of junk in that scrub that shouldn't be too hard to clear out. And this becomes a great expansion play for the Cedar Ave location that's part of the HSS 4043 LLC portfolio. So pretty exciting there. Atomic is super engaged at this property, looking for opportunities to help us execute this plan. Obviously, Whitney is leading the charge. All right, let's talk about Growth Fund number 2, Indiana. So spent a lovely couple days out in Indiana, traveling properties. Same plan being executed here. One thing I can add in Indiana is Atomic has upgraded their district manager out here. So we expect to have some really good leadership on the ground, experienced storage operator. We'll be executing, again, same plan. This is going to sound a little repetitive to everybody, but the plan really is the same at most of these portfolios, and that is improve and expand where possible. So in this case, we're going to remix. What you're seeing on your screen is Detroit Street. Left side is current, right side is the future. So we're going to be taking some of these single tenant, massively underpriced buildings, turning them into multi-unit buildings and significantly increasing unit counts. We're going to be doing the same thing at Old Buffalo and on Third Road. And our construction team and our entitlements team are engaged in getting those projects moving right now. For the in-place customers, it's really churning to higher rates.
Yeah.
Continues.
And so we'll share, so these photos in the top line carousel here, left being before, right being the next version of the renderings that we have. So as the other sites progress in the expansion and development plans, as we have renderings or any other photos from on the ground, as things get moving along, we'll be sharing those with you. So that's what we had for this month on the Detroit Road property, Detroit Street, excuse me.
Detroit
Street.
Crete. A little quick update on Crete. We have live footage of Crete. It looks like a lot of dirt moving around, so we didn't want to really show that to you. That's not super exciting. What I can tell you that is super exciting about Crete is the soil is stabilized and is ready to go. The materials are being moved around. What you're seeing on your screen here for Crete, bottom left corner is Crete in mid-January.
Current street,
so
our current street view, not the best, not the most eye-catching for a new customer from the road.
Yeah, this isn't going to attract anybody at all. At top corner is a rendering of what we're going to see with the new buildings erected. And I can tell you from
this is drone footage from probably November or so.
Okay. From
the rear of the property. We couldn't quite capture all the rear property pre-work that was being done, but more capturing a lot of the property site and facing the road. So we're getting the full scope of the property from here, with the bottom left being from the road, looking at the property, top right from the rear property front, and then bottom right being
the future. What we intend to have really facing the customer out at the front of the property, whether manned or unmanned. We think it's probably manned at some point, at least partially, to lease it up, and then becomes unmanned and tech dependent like the rest of the portfolio. But instead of having a big lumpy dead grass field full of dead grass and mud, facing the customer, we'll have a really nice state-of-the-art office, some additional storage, as there's quite a bit of land up at the front of the property. The product in this top right picture, by the way, that is new is the stuff with the white roofing on it. So we've already expanded the unit counts at Crete and have rented up a substantial portion of those units. So we're pretty excited about the plan at Crete. Crete is trending ahead of underwriting and ahead of budget so far this year on NOI. So
some exciting advancements there. And so if you are a Crete investor, we have shared the login to the live camera feed if you want to watch the dirt at the front of the property being pushed around. If you're having trouble finding that, shoot me a note. We'll get you all set up so that you can start to see the building come out of the ground.
You should charge for that. It's kind of very relaxing. It's just watch the dirt moving from one side to the other. Let's jump over to Fitchburg. So Fitchburg, one of our favorite stores, probably my favorite location, just in terms of where it sits. It's really just a great, well-situated building. Fitchburg is a shorter term hold. It's a value add project for us. We're planning to reconfigure the first 3 floors at Fitchburg. Floor number 4, our top floor, won't hold storage, but we have a couple of alternative uses that we're working through that we think we can execute up there on the top floor. This one's really more than anything else, though. It's a reconfiguring of the unit mix, and then it's a straight revenue management play. The store was tragically undermanaged previously. It's good news for us. So we're really executing that plan with force enrolling or force adding the TPP, existing customer rate increases, and then adjusting street rates to make sure that we are maximizing rental activity and getting up to 92% occupancy and stabilizing around there as quickly as possible. It gives us a lot more pricing power.
Yeah,
there's more we can do with that high level of occupancy.
And here when we acquired it, the rates were half what they should be in the market. So Atomic has started fixing that, bringing folks back up to closer up to market. And then also one other point of good news from the development team was that we didn't have to go for any rezoning. There was a variance from 97, which was still in place. So we were able to not have to go through a whole zoning board requirement. Next step is the planning board for parking requirements, and that's in progress. So more to come on that next month or in future months.
Yeah, but that probably cut 30 to 90 days off the process for us. So this one goes a lot faster than we anticipated.
With the zoning variance, yep.
Let's talk income portfolio. This one's really pretty exciting. We just got some amazing renderings back and wanted to share that with everyone. So this is LaPorte, Indiana. It does not look like this today. What it looks like is maybe these two little buildings in the bottom picture, these two little one-story buildings is about what LaPorte looks like today. What it's going to look like is big, modern, 600-700 unit, 3-story climate controlled institutional grade box. The plan is there. We are going to be executing on this. We're excited about it. Wanted to show you what we're seeing. Same thing in Laurel. Here's Laurel. Laurel's going to be a pretty awesome institutional grade property. So same plan in Laurel. We're building the 3-story climate controlled institutional grade storage facility. And that's the meat of the expansion for Laurel. So we're pretty excited about Laurel as well. And that's the presentation.
Right, that is it. We're trying to keep these short and simple. And then now for all of our friends who joined us today, thank you. Worth mentioning that we are still accepting capital for the income portfolio. I might be jumping the gun here a little bit, but we did buy an additional 8 acres attached to LaPorte.
Yes, we did.
We did, and the feasibility study on that came back positive. So we're going to add at least 150 parking spaces to the very flat land. Keep it super simple. We're just going to do parking, gravel, probably not even asphalt or anything fancy like that, not covered parking. It'll just be really straightforward. But it was a wonderful opportunity to pick up that land and add something extra.
This was a steal, everybody. I mean, this was almost no cost, and it's going to add about $1.5 million in value if we just put simple parking on the land. So we think that's the quick and easy play. Get the value up, and yeah, we're still open for investment. So we're just reading one of the chat items.
So Nick is asking in the chat, any big picture issues with Fund 2? Things are moving forward on the Detroit road location. Any other, no.
I think everything is moving forward. So Old Buffalo is fine, is on track. Third road expansion is on track. Detroit was the piece that was holding everything else up. The city just wanted to know that we had a plan to improve that property and that it was in motion. And all of that is actually on track and in motion. So that piece unlocks really everything else. So we're on track. Don't think we're going to hit any roadblocks in Fund 2. Pretty excited to be able to bring some better product to the fine folks in LaPorte. And we expect to get that done on time or ahead of schedule.
Ed, great question about how we think interest rates in the future will affect the sale value.
It's a good assumption, Ed. You assume prefer rates to be low. So always, right? I mean, that just, the cheaper capital is, the cheaper cash is for everybody, the better for all of us. But I think our return profile that we underwrite to is so conservative. It's already assuming, much more prohibitive rates. So I don't think the interest rates do much to affect the future sale value. Frankly, I think it's already baked in.
And a number of these properties. So, and really the properties that would be looking for a sale anytime anywhere within the near term, right, would be the older properties. So Growth Fund 1, Londonderry, maybe 2, but Growth Fund 2 is we're doing such a large presence in that Indiana area that we're really investing there for a little more of the longer term.
Well, and here's
Serge, I don't know if you want to, I know Serge is kind of on the road, but if you want to chime in on this question, sale value properties.
Yeah, so if we were selling today, sale prices and cap rates are slightly higher than they were last year, but what we're seeing is they're not a direct reflection relative to interest rates right now. There's no real pressure on real estate as an industry. Some asset class, some other operators who are super aggressive with debt are running into problems. I talk to brokers regularly. The cap rate change from where things were a year ago is probably 0.75 of a point difference. So when we do our underwriting, we do sensitivity analysis to account for up to a percentage point change in terminal cap rates. So what that means is right now, if we were to project these out to be a 6.5 or 7% cap rate on exit, there'll be a change in value, but nothing that is going to significantly affect the returns. Our underwriting accounts for a big swing, big potential swing that overall would just be a slightly less of a return, but there's no meaningful change in self-storage. In fact, there's a lot of investment dollars coming into self-storage out of other asset classes. So if anything, we're seeing the recession resistance of self-storage attracting new investors. So it's still ultra competitive.
Yeah, and here's another piece to kind of factor in, everybody, is, you know, where we are situated with these assets in, you know, middle Indiana, the middle of Illinois, the middle of Pennsylvania. These are markets that the REITs and the big boys are now buying into. There's at least one REIT that has purchased an entire company in the Midwest, in the Indiana, Illinois area. And their stated strategy is to get into the tertiary markets this year. That's where they're going to be playing. So that can only help drive pricing higher and value higher. So the good news is we're already there. We're well positioned.
And not to mention, we're 1, maybe 2 years into a 5 to 7 year projected hold for these projects. So we have still a ways to go with at least what we underwrote for the project plan timeline to be. How do we, this is a question for Jim. Jim, how do we read the graphs of the numbers for underwriting, budget, and actual? We can go back to, let's see.
Let's look at one on here.
Let me pull up one here. So
the dotted line is the actual result. The blue portion is the budget, and the yellow line reflects the original underwriting. So for the income portfolio, that's, I mean, we just acquired those assets 1 and 2 months ago. So those numbers we have, you know, we have a ways to go. But if we're looking at, for example, something like the Growth Fund 1, so the blue shaded is budget, yellow being underwriting. Let's see how much further I can. It is not. No. So the question is it good for the budget and actual to be under the underwriting? We would prefer that the budget and the actual are at or above the underwriting. That said, in a 1 month period, it's not super meaningful. Ultimately, this is a longer term game. So the strategy, the goal is to get both the actual and budget should be underwriting pretty close. The actual should exceed both of those is our ultimate goal. Good
questions.
Somebody's watching the screen.
Yeah. Yes, people, folks. I love it. Y'all are here. You're participating. Thank you. Thank you so much. And then also, as we continue to have these monthlies, please don't be shy about letting me know what is worth your time, what is not, what you want to see more or less of, so that we can really make these times the best use of your attendance, that you're getting out of these what you want. Obviously, there is a lot of work that is put into the reporting and all of the numbers and the projections. So the bulk of that work goes into the quarterly newsletters. So there's a ton more detail that is compiled and put together into the quarterlies. We know that times, especially right now, are a little bit scary. And so we launched this monthly series really just to give you an opportunity to hear from us about what's going on. Some of these projects, there's going to be more monthly updates than others, especially as the projects that are a little bit more stabilized or where it's maybe just a straight revenue management play, operations play. There's not going to be a ton of updates there, but especially these construction projects as buildings start to come online, and lease up progress gets launched. We just wanted to give you an opportunity to hear from us and connect with us once a month. So these may be shorter or longer depending on what's going on across the projects. But again, we just wanted to give you the opportunity to hear from and communicate with us. and tell us how we can do better as we continue this going forward, at least for the rest of this year. And we'll see how this series goes. If you all love it, then we'll keep it running. But that's the primary purpose of this time today. If there's no other questions, comments, or feedback, then we will wrap. Ed, great to see your face. Thank you so much, sir.
Yep, we're gonna go out and we're gonna go bang on the construction and third-party management companies
For
as
sure.
we do daily
Yes.
to extract even better results.
All right. Thank you all. Have a wonderful rest of your day, and we'll be in touch soon.
Bye, everybody.
Bye.